first week itself, you're going to get access to Bullseye, and then you can use it very well. Perfect. Good. 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 So let's begin. Today, what we are going to do is we are going to talk about candlestick and technical analysis. But one thing is there. Every week, what we'll do is you will have these learning sessions with us, me, Pratik. Pratik will also join. Both of us will take the learning sessions. And after that point, you also have live trading sessions, right? Every week, you have live trading sessions. So for that live trading sessions, we have our esteemed mentor, Ashay. He will take you through the entire update. For example, let's say you had an RBI policy meeting yesterday, then how the market is reacting, which stocks are doing well, which is doing bad, everything, all the analysis Ashay will take you through. Whatever the learning that we do, how to practically implement that in much more detail, Ashay will take you through. And so for that, I would like to invite Ashay that please join and tell our team that what all things you do in those live trading sessions. Team, guys, can I have welcome Ashay to welcome him because he's going to
Hi
be the
everyone.
live
Good
trading
evening.
mentor. Yes, Ashay, please take it.
Good evening, everyone. Thank you. That's awesome. The energy is great, great, great. Hi. Before we start our today's session, though that is fine, said is going to take forward from Friday onwards. We'll be having our live sessions, right? Means during the markets, we will actually see how when the charts are moving, when the chart is getting formed, that time how to decide when to buy, where to put the stop loss. Okay, so we will be doing it step by step, and we will continue with what is taught in Wednesday session. So we, once the candlestick is explained to you, we'll only stick to candlesticks. Then there will be indicators, then there will be futures and options. Accordingly, we will also stick to the same topic, right? Now, I will just introduce myself. I have an experience, total experience, work experience of 21 years. I have worked with different banks for more than 12 years, 10, 12 years. Okay. Uh, I have started investing since 2008. Okay. I have started investing since 2008. And I am a full time trader since 2015. March 2015, I started full time. And since then, I am totally full time into trading and investing. Plus, for last 4 5 years, I have my own clients. I have been guiding people into investing in stocks, mutual funds. I give them their portfolio management service. I have that license as well. So we'll learn together step by step. Okay. So that's it. Yes, I, yeah.
Thank you so much, Ashay. Guys, so Ashay started back in 2008. So for those of you who remember, the global financial crisis was triggered. So Ashay was like, this is a very good opportunity. Now the market is bleeding, so let me start trading, and that's when he started. So he has a very rich experience, and I will definitely encourage everyone to make use of it and attend the live trading sessions. And it is recorded as well. So for those of you who couldn't attend, it will be recorded as well. All right. Thank you so much, Ashay, for joining in and introducing yourself. Um, Perfect. So, should we guys begin? Let me share my screen and we can start our today's session. Everything will be available in your LMS portal, all right? So, you don't have to worry that live trading session. When will it happen? How will I attend it? If I'm occupied, what should I do? Everything will be available in your LMS portal. So in that, all the recording will be available. You don't have to worry. Okay. Um, so this is the first thing that we are going to do every week when we meet. The first 45 minutes to an hour maximum, we will take the theory what we have covered so that all of us are on same page that what all things are covered and what all things are relevant. In the last half an hour, we will focus on charts. I will take you through the charts. I will see whatever we have learned in the first 45 minutes to an hour. We'll try to apply it in charts. And I have kind of like a gift for you in the end as well. So where you can identify all these patterns automatically, right? So that I will introduce towards the end of the session. All right. Shall we begin? Give me a yes in the chat box so I can start. I just want to make sure everyone is with me on this. Okay. Perfect. So thank you for the energy. Let's begin. So today we are going to start with the very basic technical analysis and candlestick. I hope all of you remember slightly what is technical analysis, what is candlestick, right? So technical analysis and candlestick, one of the very basic concepts in that is OHLC and OHLCB. How many of you remember OHLC? What is OHLC? What is this OHLC? Yes, O for open, high, low, close, right? OHLC is open, high, low, close, right? So basically, these are the important points for us to determine what has happened in the market. So for example, let me quickly take you through this. Market opens every day at 9:15. Means actual trading starts at 9:15. There is pre-market session, post-market session. All of you know that at 9 a.m. The market opens and there is 8 minutes of pre-market session. Actual market starts at 9:15. So when the market starts at 9:15, okay, initially let's say I'm just taking an example. Let's say the market went up, then it went down, and then finally market closed somewhere around here. So this is how the market happens. It opens at 9:15. It opens at 9:15 and it closes at 3:30. Okay. All of you know about this, the market open and close time. This is like quite basic. So I hope all of you know about this. But those of you who don't know, so market stays open. You can do your trading activity very freely between 9:15 and 3:30. All right. So we get those four data points, open, high, low, close, using this data, right? So whatever price the market started, let's say market opened at whatever stock you're looking for, whatever index you're looking for. Let's say market started at 10, means the opening price is 10. It went till 12. On the lower side, let's say it went till 7 and it finally closed at 8. Let's say this happened, right? So all these data points are very crucial to us to determine what is a candle. All right. So these data points are basically covered here: opening price, high price, low price, close price. All right. This is about it. The last one, OHLCB, B stands for volume. Volume means how many people are interested in that. So, for example, let me quickly take an example. Let's say tomorrow, all of you, went on a solo trip to China. All right, definitely there is a language barrier in China, and but you went there, and now you're hungry, right? You went to a market to just try out everything is written in Chinese, and you wanted to try out some food. So just based on market sentiment, as in if you go to the market, there are five, six shops. Which shop will you consider to go to and buy? What are your opinion? Let's say you went to a market, there are four, five shops, you are hungry. You don't essentially know that there you won't get pav bhaji, vada pav and all these things, right? So how will you understand that? Absolutely, absolutely. I can see most of the things people are with me. Yes, crowd, wherever there is more crowd, that is where there is the highest interest, that shop, right? So that is volume. Volume basically tells about in the market that where there is more crowd, where people are more interested, and that is something that we can always look for, that this is the place, this is the stock which is in a more frenzy. All right. So this is something that is there. Let's move on. By the way, I know these things are covered that day. That's why I'm rushing through it so that all of you get reminded what all we had covered and then we can go to the charts. So OHLC, volume and importance of volume, it confirms the strength of the price. We'll see it in detail. Don't worry. Now, candlestick, right? Candles, right? Candles are very important for us. Candles are something that we'll use to determine what trading activity we need to do. All right. So, what are candles? It looks something like this, right? Simple question. If it's a green candle, Who is winning? Buyers are winning or sellers are winning? What do you think? For those of you who are seeing this for the first time, just think about a signal, right? When there is a green light, you go ahead. When there is a red, you stop, right? So similarly, green is positive. Green is for buyers, right? Where the markets are going up, that is green. And red is when the markets are doing down, that is sellers are in more control. You will usually see red, right? How is this green and red determined? I know it might be covered, but quickly, if the opening price is lower, if the closing price is higher, that is, if the market closed higher, it opened low and it went entire day and closed higher, right? So if the market closed higher, that is a green. That is positive. That means the buyers have won that day. If the market opened at a price and at the end of the day it closed lower means what? At 3:30, the price was lower than the opening price. Then that is a red day. Everybody give me a thumbs up or yes that you have understood how the green and the red is determined. Okay. So green and red, pretty simple. If the market closed higher, the candle would be green. If the market closed lower, the candle will be red. Whatever is the highest price market went till, that is price upper, that is the highest price. Then there is the lowest price. You can see that from the shadow or wick over here. Okay. So this is the candlestick. Now psychology behind candlestick is this. So essentially, candlestick is highly driven by market sentiment. Market sentiment means what? Let me ask you a question. Let's say tomorrow this thing happens. Tomorrow, let's say government launches that you know Adani Industries. Today only the new Navi Mumbai airport launch was there, where inauguration was there. So let's say because of this, the government launches Adani Industries stock. You will get a 5% benefit on taxes. What do you think will happen to Adani stock if something like this happens? Kiranji, uh, focus on what I'm talking about. Okay, perfect, right? 5% tax benefit means it's good for Adani stock. So Adani stock will go up higher. So the sentiment for Adani stock has turned positive, right? So you don't know. For example, today this thing happened. After 5 years, you are coming and seeing this candle. Won't be easy for you to understand, right? What happened. So that's why the candle will tell you what the sentiment was. That the candle will tell you there was a bullish sentiment because all the buyers were very aggressive. So this is kind of thing that forces or makes candles, all right? Market sentiment, buyers and sellers dynamic. That is who is winning, who is more aggressive based on that candle is formed, right? Just one quick thing, guys. My voice is completely audible because I saw a message or two where people complained. It's audible, right? Okay. So it's audible for those of you I don't remember the name, but just check on your side. Okay. Let's go to the next one. That is type of candlestick. Now this is the important part because in market there are more than 50 candlestick pattern. All right. So we don't have to do everything. We just have to focus on these 10, 9 or 10 candlestick patterns, and that's it. That's all the thing you will need to make a trading decision in the first session itself. All right. So let's focus on what those candlesticks are. There are three different candlestick patterns. One is a single candlestick pattern, double candlestick pattern, and three candlestick pattern. All right. So what is a single candlestick pattern? Single candlestick pattern means where only one candle you will look at. You won't look at anything else. For example, all of you have seen a horse. They have like this. I forgot what they call it, but they have like this where so that horse can only focus on in front of him, nothing on the side. Yeah, blinkers. Yeah, thanks. So no, they have this blinkers on, so they can only focus on that particular route or whatever it is. Similarly, when the single candlestick pattern is discussed, you only focus on that candle. All right. For example, there are these candlestick patterns we will be talking about: Marubozu, Doji, Hammer, Hanging Man, Inverted Hammer, and Shooting Star. On double candlestick means you will look at two candlesticks together and you will try to understand whether the buyer is winning or seller is winning. And lastly, there is three candlestick pattern, morning and evening star. So you look three candles together to understand whether the buyer is winning or seller is winning. All right. Candlestick, why do we use it? The essence, the baseline for candlestick is, for example, you and I, we want to trade, we want to make a trading decision. We want to understand when I should go ahead and buy the stock. Candlestick will help you do that, right? Candlestick will tell you, okay, this is something that has happened, and that's why the buyers are strong, so you can enter, right? So we are going to do all of these in candles as well. Let's look at one at a time very quickly. First one is bullish and bearish Marubozu. All right. Bullish and bearish Marubozu. It looks something like this. Anyone remembers what is the meaning of Marubozu that we had done? Exactly. Okay. Yeah, exactly. Marubozu in Japanese means a bald person, right? So you see any shadow or wick visible, guys? Above or below this candle, any shadow or wick visible? No. That no says that there was amazing buying. For example, in green Marubozu, it gives you that comfort that as soon as the market opened, buyers kept on buying, kept on buying, kept on buying, and finally the market, till the market closed, buyers were only buying. So very simple thing. If there is a green strong candle, and this is something that has happened, what do you guys think? Who has won this day and who has the higher momentum? Is the sellers or buyers on a green Marubozu? Yes, perfect, perfect buyers. And what about red now? What about red? Who is winning in red? If there is a red Marubozu candle where there is the no wick at all, perfect sellers. Good, right? So Marubozu give you that indication whether the market is bullish or bearish, right? So if it's bullish, it can give you this candle. Can guys Marubozu have small wick? What do you guys think? Small, not too big. Can Marubozu be like this? Small wicks? Yes. Okay. So don't be very rigid. Small wick, small shadow in Marubozu candle is normal, is acceptable. All right. So this is the first one, that is the Marubozu candle. This is the theory. I think you guys have covered it. So let me move on to next one. To Doji. Next, we'll talk about Doji. Right. Doji, what is the meaning of Doji, guys? What is the meaning of Doji? Perfect. Doji means nobody or indecision. It means indecision essentially, because the market opened, some random up and down it went, and finally closed at almost the same price. Right? That's why it's called as doji, because there is indecision in the market. So that is doji. Now we have these five different kind of dojis. Number one is a standard doji. Standard doji means what? Firstly, notice in a standard doji, why is it called a standard doji? Notice how the upper wick is almost as big as the lower wick. All of you agree with this? The upper wick is almost as big as the lower wick, right? So that is called as the standard doji, right? Where the upper wick and the lower wick are almost same, right? So that is standard doji. Next is long leg doji. Now long leg doji means what? It looks something like this, where you see the legs, that is the lower part of the shadow, is much higher, much bigger than the upper part of the shadow, right? Who has won in this kind of thing? So lower part, that's why traders are calling it long legged. Okay. Who is winning in this? Okay, cool, good, good, good. So essentially, buyers are winning when long leg doji is found. Why buyers are winning is because I'll show you something. What happens when this long leg doji is formed? That will help you understand how the derivation is formed. So market opened, okay? Market opened, it went up a bit, little bit. Then the sellers completely took control of this market, brought the market down entirely, right? Brought the market down entirely. After which point buyers became very active and started to take control of the market and brought the market up completely to its open price. So Look at this example that I've drawn in front of you. Notice that the sellers were very active, all of you. Can I say first half of the market sellers were very active until this point? Can you see this fall? Sellers were very active. They were completely in control. That's why they could bash the market. But now think a step ahead. If sellers were active and they wanted to take control of the market, should this movement have happened? What do you guys think? If sellers were active, sellers were strong, should the market have come back up? No, no, right? That's mean, can I say the sellers have lost control of the market and the buyers have now become active and took control of the market? Yes, perfect. Now you understood the psychology behind it. This is the long leg doji. You see, open and close at the same price, small wick up, and there is a long leg on the lower side. Understood? So that's why directly as soon as this pattern comes in your mind, it should click. Okay, the buyers are taking control of the market. Okay. Next up is a dragonfly doji. So now with the same example, tell me what is happening in dragonfly doji. Who has taken control of the market? Yes, good. You understood. So if the legs are big, right, similar to how it was over here, that means the buyers have taken control of the market. Otherwise, the market shouldn't have come up, right? So long dragonfly doji also tells about that the buyers are taking control of the market. Next up is a gravestone doji. You see the names also traders have kept, right? Don't you think very creative names? Traders who are very means I think they just sat they like, this pattern is very I've seen this repeat, but we have not named it. What should we name it? They were that free, it seems. But yeah, gravestone doji. So gravestone doji, who is winning? Buyers or sellers? Good job, guys. Good job. Very good. Notice that gravestone is opposite to long leg doji, right? So if long leg doji, the buyers were winning, in gravestone doji, the sellers are winning, right? So sellers have won and they took the control of the market. And last type of doji is a four price doji. Four price doji means what? Open price is equal to close price is equal to high price is equal to low price. Yes. When does this happen, guys? All the prices are same. Good. Usually, two scenarios this thing happen. Huh? One scenario is circuit. You remember circuit, upper circuit, lower circuit, market can directly go up 5%, 10%, hit its circuit based on whatever the stock is, or lower circuit, right? So it can happen on circuits. Second, when there is very low volume, like the example of market we took, right? Five shops, let's say four of them, everyone is interested. On one, there are only mosquitoes roaming around, no customer, no client, no one is interested, no trade is happening. So that's also when you will see a four price doji. Guys, give me an absolute thumbs up if you understood doji candlestick pattern. For four price doji, there is no candle, right? Market opened and it stood there. That's it. Nothing else. Nothing else happened over there. Okay, perfect. Let's go to the next one. Next one is hammer and hanging man, right? Hammer and hanging man, both of these patterns, it looks something like this, right? So if I have kept the chart open in front of you and I have one question, that is hammer a bullish pattern or bearish pattern? Is hammer a bullish pattern or bearish pattern? Good, good, good. Perfect. Perfect. Hammer is a bullish pattern, right? Absolutely correct. So hammer looks something like this, right? Something like this as you see over here. So few things that you always should remember, right? Few things you should always remember. First of all, whenever you see a candlestick pattern like this, let's say all of you mentioned that hammer is a bullish pattern, right? So what is happening? What happens before the hammer or before any candlestick pattern is very important for us to take a trade. So for example, in this case, what is happening? Initially, you can see market is coming down. So all of you will agree that when the market is coming down, that means sellers are in a lot control. Sellers are lot in control. After that point, you see this hammer getting formed, right? When sellers are in control, do we need to have, means, should we have had a hammer? Should bulls be active? This is the first time the bulls but showed initiative. On this candle, bulls said, wait, we are here. We are not going to allow it to go below this price point, right? So bulls started to take control. And after that, you see this jump happening. So for all of us, I'll take you through the charts as well. Don't worry, but it's important to know. Always check the previous trend before you make a decision on the candles. Okay, the previous trend is very important. If the downtrend is coming, after that you see this hammer pattern, then you can take a trade for the upside. Now, completely opposite. Hanging man is a bullish pattern or bearish pattern? Bearish pattern. Yes, hanging man is a bearish pattern. You can see. So before a bearish pattern, some of you mentioned it's a reversal pattern, right? Very good. Yes, these are reversal pattern. Reversal pattern means what? Initially, whatever trend was there, that trend will reverse and go in the opposite direction, right? So initially, notice there is an uptrend. After that, you have this pattern forming. So this is the place where the market is telling you that sellers are taking control, this candle. And that's when you can get active for the downward movement that market can go down from here. Understood both hammer and hanging man pattern? First of all, listen, first of all, when I'm taking through theories, right? So let me also tell you this, when I'm taking through theory and I'm walking you through, because a lot of you are revising it for the first time. It's the first time you might be listening to this. So I don't get a lot of chance to answer the Q&A. So we have a dedicated 1.5, every weekend we are going to meet 1.5 hours just talking about whatever queries you guys have had, right? During the week about this session, right? So that is something number one we are going to have. Don't worry, your any of your queries if I've missed, that those will be covered during that session. Secondly, a lot of you were asking about time frame. Initially, I would say only stick to daily time frame. All right, daily time frame means what? One candle represents one single day. So initially, only stick to daily time frame and use these strategies only on a daily time frame. All right, perfect. Okay, let's move on. This is inverted hammer and this is shooting star pattern. So it looks something like this, but also remember this same thing. Inverted hammer is a bullish pattern. So initially the market is coming down. You get this inverted hammer pattern, then the market can start going up. And vice versa, shooting star, the name itself tells you, right? Shooting star. So it's always coming down, right? So after that point, the market usually tends to reverse and go down. Okay. Yes, absolutely. The trend matters a lot, a lot. If the previous trend is not downward and I'm seeing the inverted hammer, I won't take that trade. Right? Trend matters a lot. Next up, we have done one candlestick pattern. Next one is our two candlestick pattern, that is bullish engulfing. I hope all of you remember this bullish engulfing that we had done. So bullish engulfing is basically two candlestick pattern where in the second candle, it market will tell you that, okay, this particular buyers are now winning this for this stock. All right. How it will look like. First of all, always if this is a bullish reversal pattern, that is a bullish pattern. Bullish means we are expecting after this point, the market will go up. So initially, the market should have a small or big, however, but at least some bit of downward movement, right? After which point I will see. Now, ignore this green candle. If after a downward movement, I see this red candle, can I still say that sellers are in control on this bearish candle? Can I still say sellers are in control? Yes. And valid as well, right? Think about it. Market is in a downtrend. You have a red candle. That means absolutely sellers are still in control. Now, what should have happened? Next day, market opened over here. Okay. Ignore what has happened. Tell me what should have happened if market opened, sellers are in control. Can I say ideally the market should have gone down because sellers are in control, right? We have established that yesterday. So market should have gone down, but this did not happen. What happened instead? As soon as the market opened, the buyers started to take the market and completely engulfed, right? Your current candle, your bullish candle is bigger than the previous small candle, right? So market completely engulfed, ate away whatever was the negative downward movement it has done. So after this pattern has formed, can I now confidently say that buyers are taking control and this is where I can enter and the market can go up, right? I am telling it like a story because I want you to remember it, right? So that you will, it's not going to be that as soon as I see a red candle, green candle, oh, let me buy. It's not going to be like that. It's going to be, okay, what is the trend? After that, this pattern is formed. Afterwards, that means I can expect market to go up. So this discipline is very important. All right. Yes. Perfect. So this is how the bullish engulfing looks like. If this is clear, then I think bearish engulfing is pretty clear. What kind of a trend we should look for before the bearish engulfing? What kind of a trend we should look for before the bearish engulfing? Good. Good. Absolutely good, everyone. It's a reversal pattern, right? So initially the market was going up. You have this green candle. That means the buyers are still in control. After which, on day two, this is day one. On day two, what has happened? On day two, the sellers completely came and engulfed whatever the previous day buying was. That means sellers clearly told that we are going to take control of the market. And my after this, my expectation would begin that market can go down. All right. Give me a thumbs up that you have understood engulfing. It cannot happen on same day because this is two candlestick pattern, right? So this is 1 day ka candle, this is day two ka candle. So you need two different days. Okay, perfect. Now let's go on to the next ones. That this is the theory for bullish and bearish engulfing. Absolutely. Yes. So on day three, after these two candlestick pattern, on day three, you can enter the market, right? Next is bullish and bearish harami pattern. You guys remember what is meaning of harami? The first time when we ask, there is always a laughter, there is always some different thing until we tell that what it actually means. And today, I feel it's like parental advisory was given. Everyone is mentioning pregnant, 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 pregnant. So yeah, good change. Yeah. So harami means a pregnant person, right? Pregnant woman. So it looks something like this, and you can see that in the previous candle what is happening and on the latest candle what will happen. Let's look at it one at a time. So this is again a reversal pattern. This is again a bullish reversal pattern. So what I'm expecting is some bit of downward movement should happen before this. All right. Then this red candle, I know that there is a downtrend before it. That means this red candle is justified. That means it makes sense why this red candle is here. Next day, as soon as the market opened, ideally what should have happened? Next day, as soon as the market opened, the sellers, if they are in that control, they should have taken the market down, right? But that did not happen. They couldn't take the market down. In fact, the buyers fought and they stayed within the range of previous day, right? So that gives me an indication that now the buyers are taking control of this particular stock and it can go up. So after this day on day three, I can enter the market for a bullish trade, right? Basically, I can enter, I can buy that particular stock, right? So this is how the bullish harami looks like. For the bearish harami, it will be completely opposite, right? Initially, there would be an uptrend. And after this pattern is formed, I will essentially focus on the downtrend. That after this point, I can exit the market, I can take a short trade and do all these things, right? Pretty simple harami pattern. Yes. How is it different than the engulfing? Completely different. If you see the day two candle in engulfing, the day two candle used to be very big. Completely, it used to eat away whatever was the day one candle, right? So engulfing used to engulf the entire candle. This is not engulfing, right? This is that's why we call it like a harami or pregnant woman, right? If you see, it's in the belly. So it does not matter. These wicks does not matter. Okay, very important, guys. These wicks does not matter. The day two candle body, that is only this much, should be within the day one candle ka body. All right, give me a thumbs up or yes if you just understood this. The main point is the candle body. All right, I'm comparing the body of the candle. Let it be engulfing, let it be haram. I don't care about the big part. Okay, perfect. So bullish and bearish harami looks like this. Doesn't have to be at center. It's if it's close to center, it's good, right? That would be the best case scenario. But it needs to be in the body of the candle. Even if it's little up down, that should be fine, but should be in the body of that candle. Next and the last one that we are going to focus on is morning star and evening star pattern. So morning star and evening star pattern is what? So it the naming is also like that, where it will justify or where it will signify what will happen in the market, right? So for example, in this case, what is happening? Initially, market is in an uptrend, right? Notice the first candle of two candlestick patterns or three candlestick patterns tells you about the trend that was going on before that candle is formed, right? So for initially the market was going up, so you had this green candle and you're comfortable. Yeah, it makes sense. Uptrend market, you have a green candle. Good. Day two, what kind of candle is this, guys, on day two? Ah, good question. By the way, white and blue. All right. Blue is basically red. So don't get confused. It's the same thing. White is basically green. That is, it's a green candle and blue is the red candle. Okay. So yeah, day two candle. What kind of a candle is this on day two? Can I say this is like a doji, very small bodied candle, right? Like a doji or a small bodied candle, right? So day two, because think about it, what is happening, okay? Initially on day one, buyers are winning. I hope all of you have understood that. That day one, the buyers are winning. Day two, ideally, if the buyers are winning, day two shouldn't be indecision, right? Day two, the buyer should take it more higher, but they are not able to take it higher. You see, there was a fight, and that's why the body is so small because sellers are also fighting the buyers. But at the end of the day, nobody decided what to happen. Important signal we get that this is where the market is ready to go down, that is ready to go into downtrend, is day three. If the market is in an uptrend, ideally we should not have this sell off. All of you agree with this? Ideally, we should not have this sell off, right? So day three tells you that now the sellers are taking control and the market can go down. So understand the flow of power shift, how sequentially it is happening. Day one, the bulls were in power. Day two, the bulls and bears are fighting. No one is in power. And day three, the sellers have taken control. So this is how the sequential shift happens. After that, on day four, you can go and enter the market and do this particular trade setup. All right. And evening star, right? Evening star, what the first star you see in the evening, right? First star you see in the evening. So that is an evening star, after which it signifies that there will be night and darkness, right? So with that context, this is also named as evening star because after this point, the market can go down. The next one is morning star. Morning star, completely opposite. There is a downtrend in the market. Then there is an indecision, right? So this red candle, indecision, that means buyers and sellers are fighting. And on day three, the buyers have taken control. And after that, we can expect the market to go up higher. Okay. Again, I'm repeating, focus right now on daily candlestick where one candle means one day. Don't focus on any other time frame if you're starting off. Focus only on daily time frame. One thing as well that I would like to add over here in morning and evening star pattern, that is this thing. All right. The first candle, the 50% of first candle is somewhere around here. For it to be a very effective morning evening star pattern, this is something that needs to happen. The first day ka 50% of the candle, wherever that is, day three close should be below that. Give me a thumbs up if you have understood what I have told. Day one, 50% of day one, wherever that is, day three close should be lower than that. So if you get this, it is a very high probability setup. Okay, day three close should be lower than day one, 50% of day one. All right. Similarly, here, day one, the 50% was somewhere around here. The day three close, because it's a bullish pattern, the day three close should be higher than the day one, 50% of the day one. Okay. And what is the logic? Just pure psychologically. All right. So I'll tell you what is the underlying logic behind this as well. So, for example, if you look at day one, right, there is a big green candle. Can I say there was a lot of institutional buying as well on that day? All of you agree? Because you and me, we can't create such big candles, right? So there needs to be institutional buying as well involved. Only then you get a good candle. So institutions would have bought across this day. So their average price would roughly be 50% of this candle. So psychologically, if they allow the market to go below this and this pattern gets formed, that shows that maybe they are losing control. So that's why we focus on 50% as well. Initially, when you're learning, just identify this thing. As you start taking trade, I would say that start looking at the 50% mark as well. Sounds good. I hope this was clear, everyone, that what I have told about 50%. Okay, perfect. If it's not 50%, then let it go. We have so many candles, so many stocks, so many charts. Why to just fixate on one thing, right? So this covers our candlestick pattern, one candlestick pattern, two candlestick pattern, three candlestick pattern. This covers our all the candlestick pattern. The next step that we have to use with candlestick is support, resistance, and change in polarity. I'm sure this is also covered for all of you that the market is taking, but I'll quickly brush through it. That if you see what is happening over here, the market is basically taking resistance over here. So resistance means what? Market is continuously trying to cross that line, but it is not able to. So for example, if I quickly write down the name, like let's say the number, let's say this is 50 rupees. All right. Let's say that is 70 rupees. And this is 85. Okay. Let's say this is the situation. So now look what is happening. The market is coming down. After that, the buyers are trying to take it higher. But every time market is coming close to 50 rupees, you can see so many candles have formed but never crossed that line. All of you, yes. So that particular point we say as resistance. So resistance is the place where sellers are more active than buyers, right? So that is resistance. After which point, this is the place where market finally crossed above this resistance, right? You can see a full candle getting formed above this resistance. So that says that this was a breakout, right? This is called as a breakout, where the market goes above the resistance point. That is called as a breakout. After the resistance is crossed, this is the place market took the first resistance, came back down, and now you notice what is happening at the same 50 zone. Can all of you see that at the same 50 zone now market is continuously taking support? Give me a thumbs up. Now you can see that you have understood why this is support. This is now support because when market comes down, the buyers aggressively buy at the same price point. And this is called as support resistance polarity. What does that mean? That means that once a support or resistance is crossed, if the market comes back to that level, the market will usually react opposite. So for example, if when there was a resistance, market crosses that, and when it comes back, usually you will see that that resistance has now become a support. Let's take the same example here as well. You had resistance, resistance. So market finally crossed above 70 over here, went above, came back to this 70 zone, and now you can see how that 70 zone is acting like a support. Very important concept, very crucial concept, very basic as well, but very important that you should know as well. You should know about it. Can I get a thumbs up that you have understood support resistance polarity? Yes? Okay, perfect. Because what I'm going to do, why I'm asking this, what we are going to do today in the next maybe 10 minutes, what I'm going to do, we are going to combine our candlestick knowledge, we are going to combine our support resistance, and identify opportunities which give us high probability setup. Okay, so that I'll take you through the live chart. Trend lines, I'm sure all of you remember this. So basically, market keeps on going up. So if you connect all the lows, you can see that market keeps on going up. And when you keep connect the highs, you when the market is going down, so it's a descending trend line, right? So it's a ascending trend line, descending trend line. And when the market keeps on bouncing between the two, one resistance line, one support lines, it keeps on bouncing between these two lines. That is called as an ascending channel. All right. When the market, you can see, right? Why is it called ascending? First of all of you, easy, I hope, because the market is going up, right? That's why it's called as ascending. Why is it called as channel? Because there is a support level, there is a resistance level, and market is bouncing between those two levels like a channel. So that's a ascending channel. This is a descending channel. This is a parallel channel where market remains sideways between a resistance and support. Can someone tell me what else can we call this as? Uh, Today's session is till 10. We have 1.5 hours of session, learning session. Okay, good. By the way, rest of you, absolutely correct. It's called as consolidation or it's called as sideways movement, right? Absolutely good. That's correct. So this is channel. The next thing that I'm going to do now is something new. Okay, so I need a little more focus over here because a lot of you, first of all, tell me how many of you have been trading or in the markets, investing, whatever you have been doing for more than 5 years. How many of you have done that for more than 5 years? Quite a few of you, I see. Excellent, excellent. So this is something that you guys will relate a lot on. For rest of you, you will understand how these things work. So key tenets of Dow theory. Dow theory is like the fundamental concept, right? It's the basic concept on which our trading is entirely built on. So Dow theory looks something like this. There are three trends in Dow theory. One is primary, one is intermediate, and one is minor trend. Now, what are these three trends? Let us try to understand this. First of all, if you look at the primary trend, let us cover primary trend. If you look at primary trend, if a stock has started over here and at the end of the day, after 5 years, 6 years, it has come over here. Let's say it started at 10 rupees and it went till 150. Is it a bullish stock or a bearish stock? Very basic, but all of you agree it's a bullish stock. Yes, perfect. It's a bullish stock, right? So usually when the stock is bullish, usually when the trend is longer, right? You will see the primary trend will be positive, like it will be going up, right? So this primary trend, you focus on multi-year. For example, 1 year, 2 year, if the stock is continuously going up, that stock has a positive primary trend. Then there is intermediate trend. Now, what is intermediate trend? The stock market does not move like this, huh, guys? Stock market does not move like this, that it directly goes up. Today it started at 5. After 1 month, it's 100. So it directly goes up without coming down. It always goes in waves. I'm sure all of you have seen from the chart as well. It always goes in waves. So this black line is something that we call as an intermediate trend. Now, what is intermediate trend? Notice that from here to here, just focus on this blue box. Is it an uptrend or downtrend? Uptrend. Yes. So it goes in waves, right? So this was the first wave, a small uptrend. Then it comes a little down, a small downtrend, right? Then it again goes up, a small uptrend. So it keeps on repeating this process. Small uptrend, right? Let's say it goes up 50 rupees, then it comes down 30 rupees. Then again goes up 40 rupees, comes down 15 rupees. So it keeps on making this movement of up and down, and that is called as intermediate trend. And lastly, the minor trend is what? Minor trend is noise that happens every single day. If you notice this intermediate trend, let me focus on this intermediate trend, all right? This intermediate uptrend. Now notice on this intermediate uptrend what is happening. Initially, there was a small uptrend. All of you can see the red line. All of you agree that that red line in that box has a small uptrend. Yes. Then very small downtrend. Then small uptrend. So minor trend keeps on making small movements up and down, which are majorly a noise to us. And this three combined is called as types of trends under Dow theory. Easy to understand? Yes, multi-year is primary. Your intermediate trend is 6 to 8 months, right? Max to max. And your minor trends last 4 5 days. That's it, right? We don't have to avoid minor trend. Minor trend helps us, right? So we don't have to avoid it. I'll take you through the chart and that time I'll show it to you as well. So this is where everything is written. Notice what is written over here. So first thing, yeah, okay, there is not a slide of primary trend. Primary trends last multiple years. I'll add that slide later on. Secondary trend lasts like there's short-term correction or pullback within a primary trend, just like we saw, right? That wave comes back again, goes up. It lasts from few weeks to a few months, right? So it's small, 2 months, 3 months. That's all it is. Secondary trend. Minor trend is noise, have little significance in long-term analysis. So it's most often than not, it's a noise, right? Phases of primary trend again. Time frame again, as I'm telling you, focus on daily time frame on for everything. Don't go on in intraday or any other time frame. Right now, daily time frame and weekly time frame. Phases of primary trend. So how the primary trend goes about. So let's say recently when there was war like scenario, right, in March, right, India Pakistan. How many of you aggressively bought stocks back then, where you went to the market because market had corrected by that point? Market is correcting since last September. Anyone bought aggressively? So I have a lot of people over here, but I don't have a single yes, right? Maybe one or two yes. Okay. So that's clear. And why that happens, you will understand from this particular phase, that phases of primary trend. It looks something like this. So what is phases of primary trend? That any stock, any and every stock has gone through this and will go through this kind of reversal. So what is happening? Initially, the market, let's say, is coming down, right? So any of you is interested when the market has come down from 2000 to 500 rupees? Anyone is interested? 75% correction. For those of you who are telling yes, I will 1000% tell you, you are not going to buy. I can write it on stamp paper and give it to you. Because there is always fear. You underestimate fear. Currently, the market is doing decently. That's why the emotion is very positive. So we are like, no, no, of course we will buy, right? But no, most people will be scared. Why? You open newspaper, India and war, we will mostly attack Karachi and whatever things so will come. You open news channel, someone is shouting on someone else. Everywhere there is negative news. There is fear of layoff and all these kind of things will keep on happening and no one will buy. And trust me, I'm not judging anyone. The same thing that we have also gone through. So that's why it's very relatable, right? So, but in this space, there are few people, few funds who buy, right? Because two things happen. Big fund houses has information advantage. They have big research team, big research houses. They have done all kind of industry analysis. So they are sure that this is a good valuation. And secondly, they buy because they have a lot of fund size. So whenever they see value correction, they enter. But we don't want, we know, any of you have a big research team to do this? No, we don't have a big research team. We don't want to rely on it. When can we enter? So when the market goes down, usually when these big fund houses, informed investors buy, promoters as well, a lot of time buy, okay? When these things happen, the market goes into a sideways movement, or we also call it as consolidation, right? Market goes into a sideways or consolidation. After this point, after the entire consolidation phase is over, notice what the market does. After the consolidation phase is over, what has happened over here? Market has broke off. broke a resistance point and started to go up. Now, when the breakout happens, when the market goes above the resistance point, that's when we have to enter, because it gives you assurance that okay, the accumulation phase is over. Now the next phase that will begin is the markup phase. So markup phase is the phase where most amount of retail participants enter the market, and that's a good place to enter. Okay. First of all, give me a thumbs up if you understood how market transitioned from accumulation to a markup phase. Yes. Okay. What happens? Market goes into a markup phase. Markup phase, the market is completely going up. Okay. Market is continuously going up. It has reclaimed its 2000 price point as well. And now the market is at 3500. Okay. 3500. Now be with me. Now you saw a stock which was 500, but you were fearful, right? There was so many negative news. Today that stock is 3500. How many of you are willing to buy? Stock has moved from 500 to 3500, right? But I'll tell you again, one emotion is missing. For those of you who are telling no, trust me that one emotion is missing, and that is what you know, FOMO, fear of missing out. That emotion easily creeps in. What is happening in markup and distribution phase? I'll tell you. During markup and distribution phase, these all investors, they are continuously selling. They are exiting because they have made good profit. They have bought at 500. Now the market is at 2000, 2500. So they are continuously selling. And this is where that you enter. How many of you have entered in distribution phase? For those of you who have traded before, how many of you have entered? Now you can see it that, yaar, this is something that had happened with me, right? So I can see a lot of me in the chat box. So because the FOMO trickles in, you are seeing, and everything will be positive, all right, about this company. They have given a high EBITDA margin. They done this expansion and everything will be there. After which point, what what happens? Market goes into a distribution or sideways movement. Again, consolidation. I don't know this is distribution. Okay, I don't know this is distribution until market does one thing. Instead of making a breakout on the upside, the market breaks the support level. So when the market breaks the support level, can I say the sellers have now taken control of this particular market, right? And that's when the distribution phase is complete, and then the market goes into a markdown. And you know what happens after markdown? It this Again, same thing repeats. Markdown happens, accumulation happens, markup happens, distribution happens, markdown happens. So market keep on doing this churn. All right. So it is very important we understand when we are entering. The best place for us to enter is the markup phase. The worst place for us to enter is distribution phase. All right. So one common question that I have, I don't know if you guys have it, that how should I distinguish between accumulation phase and distribution phase? How many of you have this question, that how to distinguish between accumulation and distribution, right? So this is the question that usually comes in. So how do you identify? So this is a consolidation, right? This is the consolidation. After which point, what has market done? Can I say market has broken the resistance? Yes. So when the market after a consolidation breaks the resistance, that is an accumulation phase. Okay, that is an accumulation. If after the sideways or consolidation movement, that market has done a good uptrend and then it has gone a sideways consolidation movement, after which if the market breaks the support, that gives me a confirmation that it's a distribution phase. So even if I enter over here, I won't enter at 500, right? Because I am not an informed investor. Let's say I entered at 1000 and this distribution phase happened and I exited at 3000. How many of you will be happy with this? Entering at 1000, exit at 3000. Happy? Yes. So this is the mindset shift you have to do. Don't try to bottom pick. What people usually do, they try to buy. No. What will happen? I'll tell you when you try to enter at 1000. This is 100%. I'm basically telling you this is यहाँ पे like कुआ है, यहाँ पे खाई है. This is where your pitfalls are and where you can fall. So when you see that the stock was in accumulation at 500 and the stock has crossed 500 to 1000, right? When that happens, what will happen? You will start thinking, this stock was just 500 2 months back. I should wait. Someone had commented also, I should wait. It will come down a little. After that, that I will buy. How many of you will do that or already have done that? That you have seen a stock at a lower price and now you can't enter because you're waiting. Oh, it will come a little bit back, and it never comes back and you completely lose it. And then as a FOMO, you will enter over here. The emoticons are telling itself that how many people do it, right? So this is a very common trait that happens. Nothing to be ashamed of, nothing to be, we are here to learn. So, but identified that this is the problem and how to fix it. Okay, perfect. So these are the three phases we discussed. So this is how it looks like. So in the accumulation phase, you will see there is this belief, hope, complacency because there is a lot of negative news. Then there is markup phase where usually most retailers enter. Distribution phase, greed comes in now. As soon as you feel there is greed coming in, that should tell you that you are doing a wrong trade, right? And then there is the fall, that is distribution, and the cycle repeats. Okay. So in bull market and bear market, this is something looks like. Don't worry, I will take you to the live chart and there we'll do it. Okay. So first things first, until now, what I have covered, are you all with me? Give me a thumbs up, give me a yes. I'm showing you on the live chart as well. But until now, whatever we have done, you are with me. Perfect. Great. Amazing. 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 Let me share charts as well. Yes, I will show you that what decisions you guys have to make your own portfolio as well. Okay. Let me know my screen is visible. Okay. Okay. Thanks. Okay. So my screen is visible now. Now let's go on. We have close to 25 minutes. Let's go on, identify candlestick patterns and identify support resistance. Then I'll show you accumulation distribution as well. And the last thing that I wanted to give you, I'll give you that as well. Okay. So first things first, I will ask the questions you guys have to answer. Okay. What is this pattern? What kind of candlestick pattern is that? Don't focus on what chart it is. Okay. This is a random thing. Yes. Yes, it's a two candlestick pattern and absolutely it's a bearish engulfing. You see the second candle completely engulfed the first one. So it's a bearish engulfing. What are the prerequisites for bearish engulfing? First, I need a small uptick, right? So that is there. Then you need that candle formation. After this point, you can enter over here for a sell trade. Okay, let's go on to the next one. What is this candle? I have two correct answers for this. For those of you who are telling hammer, good. For those of you who are telling doji, good. But identify what doji it is. If I'm saying that is a doji, what kind of a doji it is? Long legged. So you notice hammer is a bullish pattern. Long leg doji is the bullish pattern. So we have both bullish patterns, right? So notice now, let us see the prerequisite is there or not. Initially, I want the market to come down. It came down. Then it gave me this long leg doji or hammer pattern. And if you had bought over here, that is on the next day, you could have capitalized on this uptrend. Sounds good until now? With me? Yes? Okay. Let's identify some more. What is this pattern? Hint, this is a daily time. Yeah, this is a daily time frame, and this is a three candlestick pattern. Yes. Morning star. Why some few people are telling evening star? Evening star will come in evening, right? That is when the market has gone up. Then evening star will come, and then market will go down, right? So it's a morning star pattern. Absolutely correct. So what happens in the morning star pattern? What do you have to do? Market is coming down. You notice a morning star pattern. If you enter over here, you could have capitalized on this up move. Notice that these are the three trades I've taken. I've shown it in Nifty. I've shown in Nifty in the last 5, 6 months. Very good trades, right? So these are the three trades that were available to you if you can identify these particular counters. Next, let tell me what this chart is, what this candle is. What is this candlestick pattern? Yes. Okay. Good. Good. I like this unanimous answer of evening star. I hope those of you who were asking evening star can see it in front of yourself that why this is the evening star, right? Day one bullish, day two doji, that is body small, day three bearish, right? So initially, what do you want? You want a trend, then this pattern comes in, and you could have capitalized on this downward movement. All right, perfect. Next, let's go ahead. Now, few things. Identify that whatever correction Nifty did, that is how much ever Nifty came down, both the lowest point in Nifty, all of you could have traded. Do you agree with me? You could have picked this lowest point. Anything complicated I am showing you that rocket science is required over here? No, right? So over here, so two things, your morning star pattern, your hammer pattern, you have these positive patterns coming up, right? So you can capitalize on these movements if you start identifying it. Okay, perfect. Let's move ahead. I'm not encouraging, by the way, that you need to do this. Pick the lowest point or highest point. What kind of candlestick is this, guys? Good. So this is tradingview.com. I'm using TradingView. That is a free software. That is a free. It has a charting tool as well. So any of you want to use charts, you can use TradingView, or you can use your broker terminal as well. Right? Not a problem. Everywhere the candles will be more or less same. Okay. Yes, it's a three candlestick pattern and absolutely correct. It's an evening star, right? So what are the prerequisites again? The market should be going up before the evening star. This happens and look at the aggressive sell-off that you could have captured on this. Another pointer, this is the highest point in Nifty, by the way. All of you, this is the highest point in Nifty. So Nifty has gone, the maximum it has gone till 26,300. You see, even now it's trying to go, but it has not capitalized on this. So you could have captured all-time high as well. Yes, this is daily time frame, if you notice over here. Okay, perfect. Now let me ask you some more. Okay. All of you, is this a channel? Is this a correct ascending channel? Yes. So this is how you draw ascending channel. What do? You connect resistances, you connect supports. That's all. Now identify how you can trade. Okay, identify how you can trade. So on a support level, who is aggressive, buyers or sellers? First question on a support level. Day two candle in morning and evening star can be any colored. Okay, it can be green, it can be red. It does not matter because small body shows indecision. So day two candle can be anything. It just should need to have a small body. Buyers, right? So notice the buyers are aggressive on the support level. So let us look what is happening over here. What kind of candlestick is this? What kind of candlestick is this? Good, good. It's a hammer pattern. Hammer is a bullish pattern. So what is the prerequisite I want? I want the market to come down, then give me hammer pattern, and you could have capitalized on this upward movement, right? Let's again do the same exercise. What kind of pattern is this? This one single candle. Hammer again. Again, same things. You want the market to come down, then form a on hammer pattern, and then the market goes up. So what we have combined over here, we have combined support resistance logic with candlestick. If both come together, you get a high probability trade setup. Okay. Give me a thumbs up if you have understood how we have combined both of them. If hammer happens to come in an uptrend, you will ignore it, right? If market is going up, you see a hammer, I'll take false conditions as well. All right, perfect. Now let's do the opposite. Why not? Let's do the opposite. So on a resistance, we all are clear that on a resistance, the market, the sellers are aggressive, right? So notice what is happening. What kind of candlestick is these two? What kind of candlestick is this two? This green and this red. What kind of candlestick is this two? Yes, absolutely. It's a bearish engulfing on a resistance point. So you could have made a sell trade over here and then exited over here and made the profit. So notice between this April 9 to let's say somewhere around 23rd May. So one month, approximately in 1 month, notice how the market is moving. First, you could have capitalized bought over here at this hammer. Then you square off, that is exit that trade, make the profit over here. Bearish engulfing, so you could have sold again and then made a profit over here. Again, you see a hammer, bought again, made a profit over here. So all of you can understand how we are taking decisions using support resistance and candlestick. What time frame to trade? This is daily time frame. I'm only focused on daily time frame because I want all of you to only focus on daily time frame for me. Okay, perfect. Let's take some more examples. Okay, what kind of candlestick is this? This three candlestick pattern. What kind of candlestick is this? Evening star. So again, prerequisite are followed. Up, then downward movement. So you could have capitalized on that. This is the trade we have to take. Let's see some more. Okay. Okay. What kind of candlestick is this, guys? These two, this red and this small red and this green. What kind of a what kind of a candlestick is this? This two candlestick pattern. Okay, all of you have mentioned bullish candlestick. Now my question to you is it a valid bullish candlestick? Is it a candlestick where I will trade? No, I will not trade. And yes, a lot of you have mentioned that itself, right? I will not trade. Why will I not trade? Because the prerequisite is not followed. For my bullish engulfing, the prerequisite is market should come down. Then I should have this. Only then I will take a trade, right? But if you notice what is happening over here, the market is not coming down. Market is going up, right? You can see market is going up and then you have bullish engulfing. So, and everyone, this is a sign that don't take, just because you saw bullish engulfing, don't enter. See prerequisite condition if it is followed or not. Because you can clearly see, did this bullish trade work? What do you guys think? Did this bullish trade work? No, it did not. You see, within the next 3 days, market completely went against you, right? So that's why your prerequisite is very important because it will define whether this is a psychological switch where the buyers are taking control or not, right? Let's see a few more. So this was, by the way, daily time frame. So let me go to the weekly time frame because I just want you, all of you, to focus on daily or weekly time frame. All right. I'm coming to that, Vaibhavji. I'll come to that. So what kind of a candlestick is this? What kind of candlestick is this? Bullish engulfing? Yes, bullish engulfing. What kind of a candlestick is this? This green one? Long leg doji? Yes, both are bullish patterns. Could have capitalized. Let's move on. What kind of a candlestick is this? Bearish engulfing, right? You see uptrend, bearish engulfing, market is coming down. Do you need more examples? Or you have understood the gist of it, that how we have to do it? Prerequisite, candles, then you understand where it will go. All right. The answers are right in front of you. Only thing is don't get impatient. Okay. Harami pattern someone needs. Wait, let me see Harami pattern. I think there was an Harami pattern recently. Yeah, look over here. This red candle, this green candle. Can I say this is Harami pattern? This red and this green. Does this pattern work 100% of the time? No. Nothing in market works 100% of the time. This is high probability setup, so it will work six or seven times out of 10. So yes, this is Harami pattern. So you can see it's like a pregnant woman. So this is Harami, bearish trend. After that, you are having Harami. So this is how you can trade. All right. Morning and evening star 50% criteria. Sure. Where was the morning star? So this is the evening star pattern, right? So the first candle is over here. So 50% of that first candle is somewhere around here, right? This is the 50%. The third candle, notice, because this is a Harami pattern, third candle, notice that how it has closed below this, right? So only if it closed below this, that's when it gets confirmed that this is a Harami pattern, right? If it does not, then this won't be a Harami pattern. Let me see if there is an example for that. Okay. Is this a Harami pattern? This three candles? Is this Harami? So not Harami, Evening Star. Okay, I was talking about Evening Star here. By mistakenly, I'm telling Harami. This was for Evening Star. These three are. Is this a Evening Star pattern? Evening Star? No, right? So be very strict with Evening Star as well. Is this Evening Star pattern? One, two, three. Is this Evening Star pattern? No, it is not. Your second candle should be an indecision, right? Look at the size of second candle. It's bigger than both of the other candles. So that is also not an evening star. So that's why you have to be a little strict. Okay. So this was about the candlestick patterns and candlestick chart. Now, first of all, tell me, are you guys how comfortable now to identify, more confident now to identify candles support resistance? Yes. So we have taken through charts as well. We have taken through slides as well. So this is how you can help yourself identify, right? Now let's focus on the next topic in hand. In the sense, I want to give you guys something as well. But before that, one last thing, because we touched upon the topic of accumulation distribution, right? So I want to take you guys and show you an example how it looks like in real chart as well. So a lot of you might have. How many of you have Tata Motors on your portfolio, in your portfolio? The number of me's I have over here, a lot of people have it, right? Tata Motors is a very darling stock, because I have seen this all these falls. I've seen this rally, then this fall, this rally, this fall. So it's it's a very love hate relationship. So, but Tata Motors is the kind of stock which gives you a lot of good trades. All right, but let's focus on the topic of accumulation, distribution, and markup, and where should people enter? How many of you have bought over here? How many of you have bought over here in the last from March? How many of you have bought over here? Okay, cool. I can see a few, yes. Now, after my entire explanation, you have to decide that what you have done and where you can change and make that alteration. And you can practice this on all the stocks. Okay. So, first things first, what is happening over here? Let's focus on this part. So, market is continuously on a downtrend, right? Market is continuously on a downtrend over here. After this point, notice this particular patch in the market, right? Let me box it up. Notice this particular. Can I say this is the entire consolidation? Can I say this is consolidation or sideways movement in Tata Motors? Trading view is free, yes. So it happens from September 2018. By the way, this is weekly chart. Okay, weekly chart means one candle represent one entire week, right? So this is the weekly chart. So from September to Jan 21, from September 2018 to Jan 21. So approximately 3 years, this was in a consolidation. What kind of candle is this? This green candle that is over here. I've kept my cursor on. What kind of candle is this? What do we name this candle? Yes, Marubozu candle. And what has Tata Motors done using that Marubozu candle? Can I say it has broke out? It has gone above the resistance? Yes. So if this, now what do we call this phase since Tata Motors has now gone above the resistance? Will this phase of sideways movement be called as accumulation or distribution? Accumulation. All of you should give me a thumbs up if you have identified and understood how now accumulation you have to understand that how you can identify an accumulation. So for all of you, is this the place to enter or is this the place to enter the sideways movement or is this the place to enter when the breakout happens? When should you enter? When the breakout happens, right? Absolutely good. Absolutely good. That moment when you enter over here, Tata Motors has gone now into an markup phase. Notice how Tata Motors is moving. Tata Motors is now gone into a markup phase. Markup phase started from 244. It went on till 1100. Is this a good rally or amazing rally that all of you might have picked up? Yes, simple concept of accumulation distribution. Okay, let us, for the sake of our benefit, understand that assume that we have entered at 250. Okay, we have entered at 250, and I don't know where it will go. I've seen this Tata Motors has again gone into a consolidation phase. Notice how it has done over here. This is again a consolidation phase. Now, tell me, guys, is this a consolidation phase of reaccumulation or distribution? What should I call this phase as? Reaccumulation or distribution? Think about it. The answer is in breakout. Yes, very good. This is reaccumulation. How did I understand this is reaccumulation? Because Tata Motors broke out again above the resistance. That means this was reaccumulation, right? So Tata Motors it went into reaccumulation. Again, it started to go up, right? We have entered at 250, so I'm considering that a buy price. Now come back over here. On this particular patch, what has happened? Tata Motors has again gone into a consolidation, right? Sideways movement. But now, all of you tell me, is this accumulation, reaccumulation, or distribution? Distribution. So, how would you understand this is a distribution? Can I say you would have understood this is a distribution based on this red candle, which completely happened? below the particular support point. Yes. So if I want to exit, where would I have exited this? As soon as this candle got over, I would have exited at 867 or something. Is this an good trade? You entered on Jan 2021. You exited October 24. You were there in trade for 3 years, more than 3.5 years, and you made 250. Now it's 850, right? So you almost have tripled your money. Is this a good trade? Yes or no? And I hope all of you have understood how you can simply using this concept identify. Because those of you who have bought it, you would not have exited here, right? Now let's go and take a step ahead. If all of you have understood this point, let me take you a step ahead. Now again, notice what is happening in Tata Motors. What is happening in Tata Motors? Again, notice what is happening. Is this accumulation, reaccumulation, or distribution, or something else? So for those of you who are saying not sure, cannot say, don't know, those are the correct answers. This is neither accumulation nor distribution. Why? Why is this neither accumulation nor distribution? Because till now the breakout has not happened. Yes, the confirmation has not happened. So tomorrow, if Tata Motors does this, if tomorrow, let's say Tata Motors breaks out over here, what will all of you do? What will all of you understand after this point? That what is starting? Can I say all of you will now pick it up that markup phase is starting for Tata Motors? So think about it. Over here, Tata Motors was in sideways movement for 3 to 4 years. My money would be blocked, right? Why should I put my money when it's in distribute when it is in sideways movement? I should put my money when it's finally breaking out and going to make new highs, right? This is where I should enter. Guys, give me a thumbs up and give me a yes so that you have understood that how easily you can pick these concepts up. You don't have to use complex things to make very powerful decisions. All right. Very simple stuff, but very effective. People think complexity is powerful, and that's why you see a lot of people complicating life. Instead of that, keep it very, very simple, your decision making. Okay. Perfect. Thank you so much. So now let me take you through the last part, that is an indicator. So all of you have given me a thumbs up that you know how to draw an indicator, or sorry, you know how to identify a candlestick pattern, right? You know now these things, so I'm with you. But I want to help you as well, where you can, the system can help you to identify whether this is a candlestick pattern or not. So this is one indicator that the team will share with you. What this indicator does is basically it picks up all the candlestick that we have studied. Okay. So look at it. Marubozu, Doji, Hammer, Hanging Man, Inverted Hammer, Shooting Star, Engulfing, Harami, Morning Star, Evening Star. We have done all of these things, and this particular candlestick indicator will plot it for you. So for example, let's take up very, very quickly. So for example, all of you agree this is an Harami pattern. This is an Harami pattern. Yes, perfect. So this is Harami pattern. So the candlestick chart will also, the indicator will also tell you this is bullish Harami pattern. All right. So you can identify bullish Harami, bearish Harami, but I don't want all of you to completely rely on this because it just identifies the pattern. So for example, is this a bearish Harami? This green and this red. Is this a bearish Harami? What do you guys think? Good. Don't get influenced by the indicator. This is not a bearish harami, right? Because what do we want? We want an uptrend before a bearish harami. Even though based on the candles, it looks like bearish harami, but that is not a bearish harami for us because we need a small uptrend, right? So that's why I'm saying not blindly believe it. But this will, especially at the start, if someone is finding difficulty to identify, this will give you that information that, okay, this is a bearish harami, this is a bullish harami, and you can use it. Liked it, everyone? Give me a thumbs up if you guys liked it. We have covered all the candlesticks over here. This will be shared with you. So all you have to do, I will tell you what do you have to do. Okay. Go to tradingview.com. This is tradingview.com. Okay. You go to tradingview.com and team will share this code with you. All right. What do you have to do? Just copy paste this code. Just copy the entire code you have, paste it over here, and then update on the chart will be set up. Just click on update on the chart. Once you do this, automatically this entire indicator will be available over here. Sounds easy, sounds simple. Okay. Is this free platform? Yes, you can use this. It's a free platform. Where to paste? Paste here. Look, on the lower side, there is called as Pine Editor. Can all of you see Pine Editor on the lower side? Right? Just go over there, click on create new indicator, delete everything that is over there, and just paste whatever indicator we have given. All right. How do you set targets? Targets are basically set based on previous high, swing low. You have done swing high, swing low, right? In the intro sections. So keep the targets on swing high, swing low. Okay, so we will be sharing this with you again on completely automated, so you can use it on any charts. For example, if I switch to Bank Nifty, it will detect for that IT, it will detect for that, it can detect for any stocks, it can do for anything. All right, so you guys can do this and identify. Perfect. I wouldn't like to take more of your time. Sorry if I couldn't answer all the questions, but because that's why we have a dedicated session. You see, there is a lot of learning we have to do. So we have a dedicated Q&A sessions, and we also have live sessions where Ashay will definitely take all of your queries and as much as possible. And the Q&A sessions, I'll cover up the list of the things. All right. I hope you enjoyed the session today. I hope you got a lot to learn. I hope I could add new perspective for people who were there, who are trading since a long time. Thank you so much for your time. Have a wonderful good night and see you guys in next sessions. And yes, tomorrow we will have Bullseye launch. So yes, tomorrow I will see you again. Okay. Thank you so much for your time, guys. Bye bye. Take care. Have a wonderful night. Thank you.